there's consensus there has to be a de-escalation of the trade tensions. How do you do that, and who will drive that effort?
Indeed, if you look at the EU-US trade relations, one could say that this de-escalation is already taking place. Following the meeting between President of European Commission, Mr. Juncker, and President Trump, there was agreement to stop further escalation of tariffs and to create a negotiating group where we are now discussing trade in industrial goods. So we are down at the negotiating table and trying to find the solutions. Of course, we are concerned seeing the situation between US and China, where this escalation is continuing. And I would say for us, it's not only a matter of bilateral relations, but also we think it's important to preserve a multilateral rules-based system and the respect of the role of international organizations like World Trade Organization. So for us, it's also a broader question.
So there's no sign of a solution just yet. How will a prolonged trade war between the US and China impact the Eurozone, impact Asia? We're already seeing a slowdown in growth.
Well, given the fact that we managed to avoid the escalation between EU and US, we are not having now strong direct influence, so we expect economic growth in EU to continue at the pace of 2.0, 2.1%. But these ongoing tensions already we see are affecting confidence indicators, which are then potentially affecting investment decisions of the companies. So this indirect influence in any case is present, so it's important that we try to address those tensions in a constructive way.
Mr. Dombrovskis, the Brexit deadline is also fast approaching. What is the Commission doing? What measures will be adopted to ensure that there's no chaos in financial markets should a hard Brexit take place?
Well, first and foremost now it's important to agree on the withdrawal agreement between EU and UK, and this work is now ongoing very intensively, and we hope to make major progress already this month. So, and this withdrawal agreement will also form a basis for transition period until the end of 2020. As regards specifically financial sector, there's also a technical experts working group between Bank of England and European Central Bank, which are finalizing their work to deal with exactly the effects on financial sector around the Brexit date of end of March.
We heard from the ESMA chairs saying that for banks based in the EU, they still want access to the clearing houses in London should a hard Brexit take place. How will you ensure that happens?
Well, actually, clearing is exactly one of the potential risk areas identified by both ECB and Bank of England, and this is one of the areas we are currently also working to see what exactly measures are needed to address this.
How will but what moves will you make? Can you give us an idea? What moves will be taken to ensure this actually happens? Well,
on this, we first need to see the report of both central banks, and this is coming, so to say, really soon. Once we have those reports, we can communicate clearly also on potential moves. So I don't want to rush the things here, but it's clearly on our radar and something we are assessing.
Mr. Dombrovskis, at this particular meeting, you also had a meeting with Steven Mnuchin, the Treasury Secretary of the U.S. What transpired in that meeting? What was discussed? Was the Iran sanction, for instance, discussed in your meeting?
Actually, we were discussing quite a broad set of issues, well, broader EU-US relations. We concentrated on our work on our cooperation in financial sector regulatory issues. We touched upon issues, for example, on ongoing support to Ukraine. So it was a number of topics we covered.
How about on the Iran sanctions? I know that the EU is seeking clarity on issues including the SWIFT payment system. I know the EU, or rather some countries like the UK, Germany, are trying to get an exemption of the SWIFT payment system. Where are you on that?
Well, on this, indeed, we also touched upon SWIFT. I would say the fundamental issue here is US unilateral withdrawal from the Iran nuclear deal, despite the fact that the International Atomic Energy Agency has number of times concluded that actually Iran is following this agreement. So from the EU side, we continue to be committed to this agreement. And therefore there is a disagreement on enforcement of the sanctions as regards Iran nuclear deal. And indeed one of the issues is that it's touched upon SWIFT, where we think it's important to avoid that this international financial infrastructure is being affected, because it actually risks fragmenting those telling services which SWIFT is providing, and SWIFT is also a basis for anti-terrorist financing tracking program. So if we now allow the situation of fragmentation where countries start to set their alternative arrangements, we are actually losing out in terms of transparency of international financial system and also of possibilities to track terrorist financing.
Is there consensus within the US that SWIFT should be exempted?
Well, this is now a work in progress. In any case, we are raising this concern and now working on US how to address it.